You're listening to the Connecticut Real Estate Edge podcast, your source for tips and tricks on building wealth through real estate in Connecticut. You will get the best techniques from leading local experts in real estate and lending. Now, here's your host, Robert Weinberg.
In today's episode, we're going to be talking about obstacles during the mortgage process and how to overcome them. You know, doing this over 20 years, thousands of loans, every single deal has some sort of obstacle, and that's the common denominator that I've seen. Whether you're a home buyer, investor, move up, whatever you're doing, refinancing, there's always going to be something standing in the way of you in getting that loan. Now, sometimes, and most of the time, it's like really small issues, really small items, and it doesn't even cause a delay or really any stress. In a lot of cases, you might even not know about an issue going on behind the scenes with your loan. But sometimes it can be a major issue. Sometimes it can be something that causes a mortgage to stop in process or not be able to complete the closing process. So I really want to give you some information today on the different things that can go wrong, that I've seen go wrong, and how to avoid a lot of these issues. Because by being proactive and trying to avoid them, it just gives you a better scenario moving through the mortgage process. Okay. So let's start out by talking about some of the different things that can go wrong. Well, when we're looking at a mortgage application going through the process, there's hundreds of different data points that have to be validated. Okay. So one of the first things that I see a lot of hurdles that can come up have to do with your identity or your citizenship. So for example, the name on your ID, the name on that driver's license or government issued ID, it needs to match all the other documents. And that might seem like something that's no big deal. But so many times the name on the ID is not the name that someone submits their mortgage application. Maybe it's missing a middle initial. Maybe it doesn't have the full last name, if it's hyphenated, things of that nature. So that's one place that we can be diligent up front. And I make sure to get that ID from every single one of my clients, because ensuring very early in the process that everything matches perfectly, it just makes the process, again, go that much smoother. Another thing is expiration dates on identity documents, or really any documents for that matter. These documents have expiration dates on them, and the expiration needs to be after the closing of the mortgage. So if you're in a position where you've got a closing 2 months out and your ID also expires around that time, I've seen scenarios where it can delay the closing because of having an ID that's expired. They will not let you close. So again, looking at it early on, getting proactive with this stuff can definitely help to make a smoother process. Another big thing that I see inaccuracies and hurdles come up on is credit, right? So there's so much data in a credit report, and that credit report is getting reviewed by underwriters, processors, and all these people in the process. And if there's inaccurate information on there, if there's information on the credit that needs further explanation, we need to be diligent in getting that explanation up front. We need to be upfront about prior items, derogatories, inquiries, or issues that have come up. And by giving those explanations up front, it can make it that much of an easier process to go through. Less conditions, less questions. Okay. So the most common things I see with the credit is just inaccuracies. I'm not talking about your credit card balance being off by a few $100s, but I'm talking about address inaccuracies, names misspellings I've definitely seen on credit, accounts that aren't showing up on your credit that should be. Sometimes those will get caught on bank statements, and then we have to add that into the debt. So just making sure that everything on that credit is accurate. I personally make a habit to go through the credit report, especially if there's an issue that I see or a lower score, right? So someone thinks their credit's okay, then we get it in and it's a much lower score than they thought. A lot of the time it's because there's inaccuracies or invalid information on that credit. So we need to sit down and go through that credit report together to make sure everything's accurate. And in some cases that might mean adding things onto a credit report, doing credit supplements, updating balances, in certain cases, updating payments that may have changed. I had a client recently who had their student loans forgiven. They were originally pre-approved when they had student loans, then they got forgiven, which obviously increased their pre-approval quite a bit. So those type of things need to get handled, and there needs to be that fluid communication to get that done. Okay, so the credit is a big one. The next item we'll talk about where things can go wrong during the process is your income, your personal income. So the biggest things I see along these lines are low year-to-date income. Maybe you recently got a raise, or maybe you took some time unpaid off and it's showing a lower income for your year-to-date. This is something that needs to be explained. I see it all the time. Sometimes figures don't match up. Again, maybe you got a raise recently, but the pay stub we have doesn't show that raise. So we need to have everything matching up. Missing documentation. A lot of the time when you start out a pre-approval and supply us with your documents, by the time you go under contract, it might be several weeks, several months later. There might be some new documents we need, like pay stubs and whatnot. And getting those early on in the process before we go into underwriting can just give us a smoother process because it's less conditions, less things that we need to ask for. Okay. So tax returns are a big item when it comes to income that we see inaccuracies on. I'd say the biggest thing there is comparing the IRS validated return or the 4506 transcript to the return that you provide to us. Sometimes there might be a change that was made or an amendment made on a tax return, and we don't have that updated return. That can definitely cause a hurdle during the process. So make sure that the returns and information that you give us is the most up to date that's available. That's a big one when it comes to your income. Now, when you're buying a home specifically, we're going to be looking at your assets. When you're refinancing, we're also sometimes going to look at your assets as well, like your reserves that you might have. But in the context of buying a home, you need to put some sort of money down, whether it's your down payment, your closing costs, or a combination of the two. And we have to get that money from somewhere. So we need to validate that there's enough money to complete the transaction. And what that really means is showing bank statements, asset statements, gift letters, things of that nature to show the underwriter where this money's coming from. And there's a lot of things, obviously, that can go awry and different questions that can come up when we're looking at bank statements or asset statements. So the biggest thing is, of course, there's not enough funds. So if you submit a bank statement that only has, let's say, $10,000, but you need $15,000 to buy the home, we need to really sit down and figure out where's that money coming from. Is it coming on the way? Is it coming from a gift? Where are the funds being sourced from? And we need to do that very early on in the process to make sure that you can complete the transaction. That's an absolute non-negotiable when I'm doing a pre-approval for someone. We got to know where all those funds are coming from. Okay, it doesn't mean we have to have the final statement, but we at least need to have some information that we can show the underwriter and document for them on where those funds are coming. Okay, so the other thing is unusable funds. Sometimes people will try to use cash to buy a home, especially first-time home buyers that may not understand the process. I've spoken to quite a few lately that say they've got all this cash saved up. In one case, it's tens of thousands of dollars saved up in cash to buy a home. Well, that's not usable funds. You can't use funds in cash to buy a home. There are ways to get the money into your bank account so that it can be used, but it's got to be done in a specific way, and it needs to be done to meet the guidelines for the loan that you're applying for, right? So these assets that you're using to buy a home need to be validated and shown to the underwriter, and sometimes that might require a little bit of creativeness on the side of you and your loan officer. It might require some strategy as well, especially if you're several months out from buying a home. So this is something that you really want to be sure is handled because it's not something that can be done at the last minute. We need to know, again, where those funds are coming from, when they're coming, so we can show the underwriter that they can approve the loan and that you do have the funds available. Okay, so very, very important on the asset side. Now, as we wind down on these last couple items that can go wrong during the mortgage process, the next one I want to discuss is the appraisal, because the appraisal is a big deal. And in most cases, an appraisal is going to be needed. Now, just to put it aside, there are certain circumstances, which is becoming more and more common, where we can get a waiver on an appraisal, and then all these issues pretty much go away when the appraisal's waived. And I'm assuming because of the advance in technology that appraisal waivers are going to become more and more common. But as of right now, all FHA loans and government loans in general, and most conventional loans are going to require a full appraisal of the property. And when they're going out to the property as a professional appraiser, they're going to be looking at a lot of different things, and they're then going to submit a report to the lender, which will have all the information on the property, the market value, different types of data points that the underwriters are looking at in regards to the property, condition, etc. Okay. We are adding now a whole other layer of, again, hundreds or even thousands of points that need to be reviewed as part of the process on the appraisal side. So a lot can go wrong, of course. But I will say the appraisal process now is much more independent than it was several decades ago when I started in the industry. So now we don't really have control as loan originators on who does the appraisal. We are most of the time needing to use an appraisal management company, which is sought by the lender that we're having the loan underwritten that's funding the loan. Okay. So on this side, it's really communication with the appraiser that's most important to overcoming hurdles, because appraisal hurdles come up all the time. They're one of the most common hurdles during the process, especially right now when we're seeing really high appreciation rates and values advancing quickly in the real estate market. Okay. So appraisals can be tricky. They can, but you got to have a good appraisal management company, a good communication system set up to be able to revise and rebut appraisals that may have issues. Okay. And what that means is your loan officer or processor providing additional data to the appraiser that may assist them in changing a report or providing a better quality appraisal. Okay, so most of the time an appraisal is going to be wham, bam, good to go and everything's set. But occasionally when these issues might come up, that communication between the loan officer, processor, and the appraisal management company is going to be key to getting things handled and fixed. Okay, then that leads to renegotiation. So if an appraisal has a problem, sometimes that may require a renegotiation, whether it's a lower price, whether it's adding a seller concession or some sort of credit to the buyer. Sometimes there might be repairs that are required by an appraisal that then need to be added in or renegotiated. So an appraisal, again, can open up a lot of different things during the process that need to be taken care of, right? Luckily, most of the time, appraisals are good and smooth. And a lot of the time, if you know there's going to be an issue with an appraisal, condition, or value, there are some proactive things that can be done just to provide additional information and data to the appraisal management company or the appraiser to help them make the best report possible, okay? Now, closing is the culmination of the process, and closing's where all these different items really come together. But there can be issues that come up during closing. It happens all the time, and I'm sure you've heard of people that have a nightmare closing. Someone that went to buy a home and just the numbers weren't what they thought, they changed, whatnot. So we don't really see that on residential mortgages now as much because of the TRID laws and the different disclosure laws. But prior to like 2015, 2016, we saw it a lot more. When the disclosure laws were very, very different. When you could actually go close a loan literally the day after you were cleared to close with no closing disclosure or anything needing to be signed. So with some of those laws changing, it made it so there's less closing issues that come up, less obstacles that can come up during the closing. But some of the most common that we see are expiration dates. So sometimes documents in the loan file may expire before the closing or the day of the closing. It's just we got to be aware of when those dates are occurring. And we need to be proactive in making sure that if a date is really close, that's going to expire around the closing, that we get that document that's needed ahead of time, that we get that document that's required, and be proactive with it, again, to get it in so it doesn't cause a last minute issue. Sometimes closings can get delayed a day or two, and we want to make sure that we don't have a last minute problem that comes up. We also need to ensure that everyone agrees on the closing date and the final term. So generally, by the time you get the clear to close, everything's been negotiated and you're at the finish line. But occasionally, things can change and a closing date may need to be changed to accommodate the sellers or the buyer. So then again, it needs to be recommunicated to everyone. Everyone has to agree on it. And sometimes that can cause some stress. It can cause some hurdles with people when it comes to like getting moving trucks, taking time off of work. all those sorts of things that come into play when you're talking about moving and getting into a home. So I'd like to say that the closing issues are probably the least of your worries during the process, because by the time you get there, most things have been handled, but it wouldn't be correct in discussing obstacles during the process without going over that finalization and that closing process itself. Okay. Numbers wise, there really shouldn't be any surprises, because you should have signed a loan estimate, a closing disclosure at least once during the process on each. And that'll give you good estimates on your numbers when it comes to monthly payments, cash to close, and whatnot. Now, I personally make it a habit to go over the closing disclosure at least a day or two before closing with all of my buyers, as well as my homeowners refinancing, to make sure that they know all of the numbers, top to bottom, on the monthly payment, how much cash is coming or going for the closing, and all of the terms of the loan that they're getting. So there's no concern, there's no questions at all. Okay, so make sure that whoever you're working with has that diligence in place and that process and protocol to make sure you know all the numbers, because you shouldn't be going to the closing with a question mark. You should know everything. And if you don't, you need to reevaluate and make sure that you're communicating with whoever should be getting that info to you. Okay. Now, I think that it would be important for us to discuss for a minute why there's so many different pieces of this process to get a mortgage, right? I wish it were simpler, easier, and just like point A to B and you're done, like buying a scooter on Amazon, right? It'd be a lot easier. But with a mortgage, there's a lot of different pieces of the puzzle. There's a lot of different chefs in the kitchen. And each person handles a different thing in this process, right? So there's going to be your loan officer who sets the loan up, the processor that processes the paperwork. There's going to be an underwriter back at the lender who's going to double check all the numbers. There's going to be generally an account manager and or a processor at the lender that's going to double check the numbers as well. There's going to be a lot of operations professionals looking at the loan, helping with things like FHA case numbers and ordering different verifications during the process. Social Security verifications, tax verifications, etc. Every one of these people has a really important job, right? Without any person, the loan process would grind to a halt. But with all these different people involved, there's a lot of these things that can go wrong. So there's more hands in the cookie jar, and everyone needs to communicate. So what I mean is, if someone's job is to get a Social Security verification of your Social Security number, and they do that, but something doesn't match up, that needs to be communicated right away so it can be handled. And with so many people involved in the process, sometimes it doesn't get communicated right. Sometimes it doesn't get communicated at all, and that can cause major issues during the process. So something that I've personally done to make sure that my clients don't deal with those issues is to be the quarterback of the process. Stay on top of everyone from the lender, underwriter, processor, closer, real estate agents. Everyone needs to be communicated with, and I take it personally as a originator to be the quarterback of the team and make sure that everyone gets communicated with and over communicated with during the process, so that there are no questions or concerns. And if there is, they can reach out to me and we can get the information that's needed. Okay. So I know that every company has a different way that it's structured when it comes to processing loans. And I've had huge teams and small, but I've found that nimble and small with a, very, very good, methodical, precise team is the best way to go in processing mortgages, because there's just less that could go wrong. There's always going to be multiple parties, but you want a more small, close-knit group. And that's something I've done to help overcome obstacles quickly during the process versus things having to wait days sometimes or weeks to get done. Okay? Now, how do we really set the foundation to get ahead of these issues up front, right? It's all about a thorough pre-approval. Gone are the days of, throwing together a quick pre-qualification, just running your credit, taking you on your word, what you make, what you have in the bank. Now it's got to be validated. Now it's got to be completely put through the systems to ensure that you're fully pre-approved. Because the market's so cutthroat with buyers right now, there's so much competition, you need to stand out. And there's no way you're going to stand out without a full, thorough pre-approval. That also means that a lot of the issues we talked about earlier in the episode can be overcome up front. So things like identity and citizenship, we can get all that documentation before you're even under contract on a home to make sure that everything matches. And if it doesn't, we can get it handled before you go under contract. Credit inaccuracies. We can use soft and or hard credit pulls to review your credit before you're under contract, and in some cases run it through the automated underwriting systems to make sure that everything's good to go and approved before you move forward. I know a lot of people don't want to do the extra work up front. A lot of mortgage companies don't. But it is, to me, a non-negotiable. And if you're not willing to give the documents and do the little bit of extra legwork up front to make sure your pre-approval is bulletproof, then you might not be ready to buy a home right now, or at least work with me and my team. All right, so that thorough pre-approval, definitely the key to getting ahead of all these issues and getting as far along in the process as we can. So moving as far down the line as we can without a property address. And that basically means verifying everything other than the appraisal, the title, and the insurance on the property that you're buying. So we like to say that every loan is pre-underwritten, and we're not issuing pre-approvals now without all those documents and all that information to ensure that everyone's protected in a smooth process, and so that these obstacles really won't come up, not the major ones. Okay. So as we wind down here, I want to talk to you guys about the actual culmination here of your mortgage process and getting to that finish line smoothly. So really, it should be as smooth as butter once you go under contract, but understanding too that something's going to come up. Just hopefully it's a minor something, right? Sometimes it's just one little thing. Sometimes it's two or three, but it's just another day for us in the business. And we deal with this all the time. So just make sure you have someone that you trust. Make sure you have someone that can really lead you through the process to ensure that when, not if, but when these obstacles occur, you feel confident and you feel motivated to move forward, knowing that you've got someone that has your back. There's nothing we haven't seen, okay? And we got to communicate early and often, especially when these obstacles come through. So just make sure that you have someone on your side and that team backing you to ensure that you can come out the other end successful with the keys to your property, okay? So I want to encourage you to stay proactive and informed through the process with your team. If you need personalized one-on-one advice, that's what I'm here for. Reach out to me for an individualized consultation. We can put together your personal plan. And if I'm not licensed in your area, I can refer you to someone that is. But make sure that you've got the right people in play to help you get the right advice. In the next coming episodes, we're going to be covering a lot more here, and we're going to be bringing on some amazing guests. So I thank you for tuning into our episode. Go ahead, subscribe, leave a review, and follow us on social media for lots more great information. Until next time, we'll talk to you soon. Take care.
Thanks for listening. If you have questions about the information we've covered or would like to discuss mortgage financing for your situation, you can reach Robert Weinberg by visiting www.robgw.com.